All right. Well, good evening, everybody, and welcome to the Wealth Mindset and Real Estate Investing Virtual Meetup. I am your host, Chris Price. I'm also the managing partner at Boost Capital Group and the CEO and co-founder of Red Fox Multifamily. Let's get a little bit into our agenda for today, where we're going to talk about how to thrive in 2025. But before we get into that, let me give you a little bit of information about our sponsors today. So, first and foremost, Wealth Mindset and Real Estate Investing. This Wealth Mindset and Real Estate Investing meetup is open to all who are interested in growing generational wealth through passive real estate investing and increasing their financial intelligence. This meetup is for the busy professionals and retirees across various industries. The individuals in the group make a good living and have discretionary income to invest in real estate for its proven wealth building power, but don't have the time, skill set, or network to do it at speed and at scale. This meetup focuses on helping us all grow our wealth mindset by learning how to build and preserve wealth while developing and maintaining an abundance mindset. This meetup will focus on multifamily real estate investing as well as other proven ways to build wealth through real estate through passive investments. And this meetup is sponsored by Red Fox Multifamily. Red Fox Multifamily helps pharmaceutical and life science industry professionals diversify their portfolios and add passive income and get all the other perks of real estate investing without having to do any of the work themselves. Red Fox Multifamily partners with passive investors to buy commercial multifamily real estate based on vetted opportunities we get to from our trusted network of the top operators in the best markets throughout the country. Partnering with Red Fox Multifamily makes investing in real estate completely hands-off, allowing investors to add passive income and build equity and save on taxes, all while being in an investment vehicle that is backed by a hard asset. And our other sponsor tonight is Boost Capital Group. Boost Capital Group's vision is to become the premier partner for busy professionals and entrepreneurs seeking to build and preserve their wealth through passive real estate investing. So before we get into the specifics tonight, I want to just go through some of the logistics. So first and foremost, as you all are right now, for those who are attending live, please keep your line muted when you're not speaking. Hold your questions to the end if you can. If you have something burning, you can type it in the chat. And I'll pick it up at the end and respond to any questions that you might have. This presentation is being recorded. And please note that this material does not constitute an offer or a solicitation to purchase securities. This is information only and should not be construed as business, financial, or legal advice. And before I get in, I also want to make sure that you guys can connect with me. I'm always interested in connecting with folks. Please do reach out to me. My email's on the screen. You can also get my contact information on our website by scanning the QR code that is on the screen. What we'll do tonight is we'll go through. I'll introduce myself a little bit for those of you who don't know me, and for those of you who are watching the recording, and then I will go into the presentation. And as we will be able to go through a little bit of Q&A later. But without further, and virtual networking, I should also say, if there's time at the end and folks are hanging around. So um, if there's nothing else, what I'll do now is just go ahead and let me introduce myself to those of you who I haven't yet already. So as I mentioned before, this is welcome to our presentation to Thrive in 2025, where we're going to talk about unlocking wealth through private equity real estate. My name is Chris Price. I'm the managing partner at Boost Capital Group. I also am the CEO and co-founder of Red Fox Multifamily, as I mentioned before. And I've been investing in passively and actively in real estate for some time now. And now I have the great benefit of helping others do that as well. Today, we're diving into how you can position yourself to take advantage of private equity investments, including real estate syndications and fund of funds and exciting opportunities in adjacent real estate markets. So let's get ready to go through and prepare for a big year in 2025. So why thrive in 2025? I want to make sure that everyone is clear. Again, we are so uh, we have such a great opportunity ahead of us in 2025. There is so much opportunity for us to be able to focus on continuing to invest in ourselves so that we can add value and continue to build wealth for ourselves and for our families so that we can continue to prosper for for generations, whether we're here and beyond our lifetimes. And in 2025, it's really important that we focus on leveling up our wealth building strategies in particular. This presentation is about identifying opportunities in private equity, real estate, and alternative investments that allow you to diversify, grow, and protect your wealth. So, as savvy investors, we need to act with foresight, positioning ourselves to thrive in an ever changing environment. Think about all the change that has taken place in just the past couple of months, where we've had in the US, we've had presidential elections and congressional elections and Senate elections, and there are major changes taking on. There have been a tremendous amount of change in the financial markets and the economies and interest rates and all of those types of things. And it is what I always like to encourage folks, and as I have been throughout the course of the year, is making sure that we all keep our eye on the ball, that we don't lose sight of what we need to be focusing on, and we continue to keep our focus on how we can continue to advance and benefit in these times of transition and change. But before we can move on to 2025, we need to reflect on 2024. When we think about this, we want to make sure that we're focusing on a few things because it's critical to reflect on what worked and what didn't work. Take, for example, take stock of your portfolio as a matter of fact. Are there underperforming assets that you can reallocate? Do you have investments that are poor investments that you can back out of, in other words, and be able to reallocate them to better assets that can help you generate a better return on your investment, as an example? Are there are there alternative assets, for example, like private equity, real estate, offer diversification and higher return potential because of many different factors. But one of the things that is going to help us be able to position to get into these types of investments is by preparing our liquidity now, getting our cash ready now so that we'll be ready to seize on opportunities that present themselves in 2025. So one of the great quotes that I remember reading is a quote that says, "Remember that success favors the prepared." So make sure that we're always focused on being prepared, keeping our liquidity when it comes to these investments right, so that we can be poised and ready to strike when those opportunities come. So let's talk a little bit about the multifamily outlook for 2025. And I should give a quick plug and let you know that in early 2025, we'll more than likely we'll be focusing on doing a more in-depth multifamily outlook where we can share insights on the research that we've been doing at Boost Capital Group to provide you with some perspectives into where the markets are headed and what are some of the trends that we're seeing as it relates to multifamily apartment investing. But what I've pulled together for you tonight is really a sample, if you will, of some of the key trends that we're seeing in this space. So what I want to make sure that you know is that multifamily real estate continues to shine as a resilient asset class. In 2025, markets like Austin, Phoenix and Raleigh are expected to lead due to job and population growth. Workforce housing also remains in high demand, especially in Class B and C properties. We'll look into metrics like housing affordability and cost comparisons between renting and owning. For example, what you should remember is that there has been a tremendous transformation that has taken place over the past several years, but this was exacerbated during the great the pandemic that we all experienced. And what I mean by that is that during the pandemic, the Federal Reserve lowered interest rates to ultra low rates in the United States. And during that time, what that increased a lot of heat in the marketplace. It drove up a lot of property values because investors and homeowners were able to get cheap access to cheap capital at 2 and 3% interest rates to go out there and invest in real estate properties and other types of investments. But in particular, in real estate, when those interest rates were got in, people got in at super low interest rates, especially for residential buyers. What took place as a result of that is that these residential buyers refinance their home loans into very low interest rates from, let's say, for example, from a 6% or 5% interest rate to a 2 or 2 and a quarter interest rate. And they secured that for 30 years. In that time, also because of the demand for housing and the markets heating up, that certainly increased the values of homes for a limited supply. And so now you have, not only do you have low interest rates, but you have higher prices, and it made it very difficult for new home buyers to get into the market. Fast forward a couple of years throughout post the pandemic, and the Federal Reserve was really focused on how did they lower the inflation that was being caused from the lower interest rates and the overheated buying. They started to increase interest rates dramatically. That combination of both high interest rates combined with high prices priced out a lot of folks from being able to secure their first home or their next home as it relates to investing. And or not investing, but just getting into their first property that they're looking to be able to be in. And as a result of that, that put things out of reach. That positions multifamily housing very well, because what that allows for people to do, if you remember, people have to live somewhere, and multifamily is well positioned to be that somewhere where the people will live. So I also want to make sure that we talk a little bit more about the markets that we're watching. Some other markets that we're really keen on are Charlotte, North Carolina. We're interested in Houston, Texas, and we're also interested in Nashville, Tennessee. And Dallas, Texas. And these are markets in particular along what we call the Sun Belt, which reaches from everywhere from the Carolinas all the way through the Arizona and some parts west. But these are really key places. And what we focus on from a Boost Capital Group perspective, for example, is focusing on strategy. Our strategy is to focus on and identify low risk, high growth real estate investment opportunities in markets with strong population and job growth to offer thorough investment opportunities to our investors. And if you think about those places, these assets are located in places where people are going. This is where they want to live. This is where the jobs are going. This is where the economies continue to grow, and it presents a great opportunity for investors looking to be able to build their portfolios in strong growth markets. That's key to pay attention to. What I also want to make sure that we cover and talk about is about some of the emerging trends. Now, some of the things that we're seeing in terms of markets and assets that are in high demand are in particular is workforce housing. So we're talking about B and C class multifamily properties in particular that are providing a lot of opportunity or looking to have a lot of promise, I should say, from an investment standpoint. This is in addition to other types of assets, multifamily assets, specifically that A class property as well is also a nice product that folks are focusing on to be able to invest in. But workforce housing in particular provides a really unique opportunity for investors to be considering and diversifying into. So let's talk a little bit about the role of private equity in real estate in particular. So private equity real estate provides unique advantages. Syndications and funds and fund of funds grant you as investors, for example, access to institutional quality investments that you in many cases may not be able to have access to get into because oftentimes these types of investments are institutional quality and they may have higher minimums for people to get into, too high that they don't necessarily have that opportunity to be able to get into those investments. But now private equity firms are able to adjust their minimums to be able to allow investors to come in at lower parts to be able to invest in institutional quality investments while also giving them the benefit of spreading the risk not only across markets and asset classes but also across operators and being able to diversify across those things is something that's really important to be thinking about. And by partnering with experienced fund managers and operators, you can achieve attractive returns without the hassle of being a landlord. Many people think about real estate investing as having to go out, scour the internet, find that diamond in the rough in your neighborhood, in your backyard somewhere, renovate it, put a tenant in it, and manage the property. And you're dealing with all of the headaches that come with it, the late night phone calls, the broken toilets, the broken dishwasher, you name it. I've done it as a single family home investor for many years until I realized that and learned that that's not the only way to invest in real estate. And in fact, you don't have to be hands-on in real estate, and you can actually invest passively in other people's real estate deals and get all of the benefits of real estate investing without the hassle of being a landlord. And that was a lovely proposition to me as someone who wanted to focus more on Main Street investing as opposed to Wall Street investing and be able to continue to build up my portfolio and cash flow that way. So let's discuss some examples of some successful investments to kind of illustrate this as an example. So, think about investing in certain real estate projects that may that I talk a lot about multifamily real estate, but beyond multifamily real estate, there are so many other private equity commercial real estate investing opportunities that are out there. There is self-storage. There is office. Now, look, people office is, I think, coming out of the pandemic, after we just spoke about that, office is a bit tricky at this moment because of all the dynamics that are taking place with the way that we work in a post-pandemic society. But I'm just describing different examples of commercial real estate that is out there for people that to consider from an investment standpoint. There is also industrial. Think of all those different types of things that exist, and real estate plays a prominent role in many of those things. So these are really important things for us to consider in terms of our investment strategy and diversification because real estate allows for investors to not only focus on on cash flow, but also the tax benefits and the potential for appreciation in the gains on the property based on the improvements in the income of the property and the reduction of expenses that help and ultimately get passed on to all of us as investors. So let's talk a little bit about expanding our horizons a little bit because diversification doesn't just stop at multifamily. I want to actually introduce perhaps a concept that some of you may have heard already, but maybe some of you haven't. And the phrase that I want to introduce to you is one called the silver tsunami. And this is something that I'll describe here in a moment, but the silver tsunami is being considered a generational wealth building opportunity. So what is it? Look, the silver tsunami refers to the wave of retirement age baby boomers who are transitioning out of their careers and businesses. And with millions of boomers stepping back from the workforce, a wealth of opportunity is emerging for savvy investors and entrepreneurs. And so what's been happening, many of these retirees own successful businesses. Think about the places where you live and work. Think about that mom and pop multifamily real estate operation as one example of a boomer run business. Think about plumbing and HVAC and electrical companies, flower shops, that landscaping business that does all of the lawn work in your neighborhood. All of those are examples of baby boomer businesses that are highly profitable. They want to pass the baton to their family members, perhaps, but they often lack successors that are ready to take it over, or maybe they're just not interested. And so that's where smart investors like us come in to step in to not only preserve the business, but also to unlock significant financial potential. So the cool thing about this is that not only are individuals are snapping up these businesses and modernizing them and scaling them for high profits, but also private equity firms, and not all private equity firms, but certain types of private equity firms who are able to focus on these assets that are too big or for individuals to acquire and too small for the biggest private equity firms to acquire, and are just right for some of those smaller to mid-sized private equity firms. And what they're doing is they are pooling resources to acquire these assets, and they are creating opportunities for passive investors to diversify into other alternative investments. And by investing in these businesses, you're not only riding the wave of the baby boomer retirement and that silver tsunami that I mentioned before, you're also stepping into new sectors, offering steady cash flow, higher returns, and insulation from the volatility of the stock market. So real estate adjacent investments also present an opportunity that I want to make sure that folks are aware of. And some of the things that I have on the screen here in terms of real estate adjacent investments are things like prop tech or property technology, um, co-living and short-term rentals, and construction and supply chain. Let me give you a little bit of a description for those of you who are not familiar. Prop tech, or prop tech for short. This is short for property technology, is the use of technology to improve the real estate industry. It encompasses a wide range of tools and applications from virtual tours and online property listings to smart home devices and building management software. So what PropTech is doing is what it's aiming to do, I should say, is to be able to streamline processes and increase efficiency and enhance the overall experience for both real estate professionals and consumers. Now, Co-living platforms, on the other hand, co-living platforms are a relatively new concept, and you can imagine with the sky-high pricing of real estate in many markets, as I mentioned before, people are starting to be, the one on the business side of things, investors and entrepreneurs are looking to be able to still supply housing to that significant demand that's out there. And so what's being introduced as a result of this are these co-living platforms, which are relatively new concept, as I mentioned before, but in the real estate industry, what they're focusing on is offering a unique living experience for individuals seeking community, flexibility, affordability, which is a big deal. I have some family members who have done this, and this is almost building a little bit more. Think of it as a more formal way of that roommate situation that some of us may be familiar with, where we all decide to come together and pool our money together so we can, each live in an apartment, but maybe we each have our own bedrooms in one apartment, but we don't have to share the brunt of all of the rent, for example. And so these platforms provide shared living spaces, typically in urban areas like New York City, which is near where I live, where residents have their own private bedrooms, but they share common areas. They share the kitchens, and they share if they have a Peloton in their apartment, they're sharing the Peloton. And sometimes even the bathrooms they will share. This is something that is continuing to be an emerging trend. There are sites and platforms that are out there that are allowing for people to facilitate these co-living situations. And of course, from a short-term rental perspective, transitioning off of co-living, many of us are familiar with VRBO or Airbnb, and people being able to take their homes so provide their homes for short-term rentals, or sometimes it may even be mid-term rentals, as an example of that. And so there's just so many different ways to be able to invest in these other real estate adjacent investments. Then I'll talk a little bit about the construction and supply chain. So these also offer lucrative opportunities. And when you think about it, this construction and supply chain is looking at distribution centers and those types of things that, development that think about development, think about the opportunities that are out there for developing new housing in marketplaces that have a tremendous amount of demand but don't have the supply. Sometimes the only way that you can introduce or improve the housing supply is by development. And this is one of the things that I would caution in this asset, from a strategic standpoint, is simply around the idea that there has been a lot of discussion around tariffs and other types of economic plays that our government in the United States may have with other countries. And the idea of tariffs, and when a country like the United States gets a significant amount of lumber and steel and other materials to help build housing, it's important to note that if there are tariffs on those things can have a significant impact on the cost of the materials for the developers. And so one of the things that's important in real estate development is that they have some solid knowledge and control over the materials that they have, so that they can control those costs and then manage the development costs to make sure that the project is on time and on budget. But if materials and the variability of pricing is projected to be one amount, but then as a result of tariffs, it's significantly higher, that can certainly erode away at the deal. So these are things that to watch out for when it comes to things like construction. Now, some opportunistic, investments for 2025. Let's talk a little bit about this some more because beyond multifamily, there are exciting opportunities in industrial real estate, self-storage, and senior housing. So let's talk a little bit about industrial real estate. I would venture to guess that many of us are taking advantage of this right now. If all of us, it's the holiday season here in the US right now, and many of us are using online stores to order our gifts for our friends and family members, and we're pressing that button, and all of a sudden, like magic, that product that we ordered shows up on our doorstep. Sometimes same day, depending on where you live. Sometimes the next day, or 2 days from now. But that all of those materials, that product is coming from somewhere. The industrial business buildings, the warehouses, etc. These are the places where the product is shipped and distributed to certain regional centers to make sure that it can actually get to where it needs to go in the time frame that we are requesting it. And that continues to be a tremendous investment opportunity. You all also have heard a lot about things like NVIDIA or other chip makers, and the beyond you know beyond the NVIDIA and AI and all of those types of things. And you can invest in NVIDIA, of course, but what about all of the things that supply NVIDIA to make sure that it is that they continue to develop the products that are fueling the future of AI. And what do I mean by that? I mean things like the warehouses from a real estate perspective, where the data centers that house all of the technology and other materials that are needed to manufacture these things. All of that, those are investment or opportunistic investments for us to be considering to invest in, to be able to take advantage of the wave of AI, for example, in different ways that may be different than what you might be thinking about when you're just thinking about investing directly in that product or service. But what about all of the products and services and buildings in our world in real estate that are helping to enable that company to do what it does? Think about that. The other thing that's important here, we think a lot about self-storage, and we actually invest in self-storage as well at Boost Capital Group. So think about self-storage. Is What's interesting about it is that it's in tremendous high demand, and it's extremely low maintenance, and you can optimize these properties by really bringing them, streamlining their operations, bringing them up to speed. So instead of them being, managed by a mom and pop, or people not picking up the phones, they can be improved, in fact, by making it all enabled by technology and allowing people to navigate through there in a very seamless way. We in America, we have a lot of stuff, and we don't like to get rid of our stuff. And so what we do with it, when you burst at the seams at your home, in your attic or in your garage or basement, you then look to self-storage facilities. And those self-storage facilities can be right around the corner from where we live, where we take advantage of putting our storage for our as consumers, as homeowners. Perhaps we're storing leftover lawn furniture that we don't have room to store, and it's becoming the winter now, so it doesn't need to be out. Or if you are a professional, like an electrician or an engineer, or a HVAC person or plumber, perhaps you store all of your tools and materials in a self-storage facility. Or perhaps many of you live near colleges or universities, or perhaps have college or university age children, and rather than bringing their stuff back from college all the way back to your destination or wherever your home base is, you decide to rent a self-storage facility to store your son or daughter's um, content in that facility so that they are able to you're able to easily retrieve them and get them set up in the next school year. So there's many different applications there, and this is just a fantastic investment opportunity. We're excited about the partners that we have there and introducing more opportunities for folks to take advantage of that in the future. And then, as I mentioned before, we talked about the idea of the silver tsunami in the context of them selling their businesses and such. But when we think about the tsunami in another way, one of the things that I want you to realize is that there's also a tremendous amount of demand for senior housing. So one of the things that's really interesting in the marketplace that I live in is that there are specific senior living facilities being built in the area that I live in, and this isn't for, this is not the elderly care that we may be familiar with by when we see in the movies or those types of things where people may not be able to take care of themselves or invalid. These are communities where these people are still vibrant and maybe young at heart, if you will, and energetic, and think about it as college for older population, and they're able to take advantage of so many different things that those communities provide them. They have, and yoga and fitness programs. They have, other types of classes and book clubs, and they have other types of mixers and get-togethers that are organized for them in these senior living facilities that we all, as investors, get a chance to take advantage of. And in addition to the real estate side of it, there's also the business side of it where you're able to take advantage of these senior housing investment opportunities to provide need in those communities to provide care. Some of these facilities are providing health care to people who are in real need of those services. And so there's both the business aspect of it, and that business aspect also includes the government funding with respect to Medicare or Medicaid, some private insurance that also factors into play here. And these can also be, from a business perspective, in addition to doing good, while providing and serving a need within housing, you're also able to do well financially. So that's passive investing in those types of opportunities, and that would also include things like residential assisted living, as an example. And these types of assets, value add projects, they also offer very strong returns. And so trends from influential investor groups like Tiger 21, and for those of you who are not familiar, Tiger 21 is a platform, a group, an exclusive group of CEOs and high net worth individuals, and entrepreneurs who share out their investment strategy and their portfolio allocation to be able to help people understand how and where they are investing, when it comes to their overall investment strategy. So what we are seeing from Tiger 21 is that they're showing a growing allocation to private equity and alternative investment assets, that are proving that these strategies are gaining more and more traction. So when we think about preparing to invest in 2025, what do we need to be doing to build our strategy? Let's talk a little bit about that, because preparation is key to successful investing. So you want to be evaluating your goals and your risk tolerance. Some of what I mentioned this evening may be right up your alley. Some of this you may need to research a little bit more before jumping in. I'll take for example, since this is really something that's hot in the news today, things like crypto. Uh, you know, I hear and of course I read about and see all the crypto craze and people getting in and becoming wealthy overnight. And one of the as I continue, I'm one of those people with patient and conservative and will take. Well, I'm totally fine with the idea of FOMO or fear of missing out because I want to make sure that I'm very knowledgeable about the assets that I'm investing in before just diving in head first. And while crypto is experiencing an amazing run up right now and may likely continue for the foreseeable future, there's also I also remember for the past few years that there was a tremendous downswing on those things with a lot of volatility. So what I'm saying here is that different investors have different risk tolerance, and you need to consider your risk tolerance with the things that I'm talking about here when it comes to private equity, real estate investments, and other alternative investments that you're looking to be able to do to diversify your portfolio. But when you do decide to take those steps, what's really important is that you partner with experienced operators who and fund managers who understand the market cycles. They understand how things are working, and they can help you think about things differently and understand the marketplace in a better way, perhaps advising you on strategies to consider when not to be getting into the market, or why are we holding off from investing, as an example, if that's a strategy that the partners that you're looking to partner with are communicating to you. Ask the question why, or why are you investing in this market? One of the things that I like to speak about is throughout my conversations with many investors, they ask about one of the key questions that they ask in terms of real estate investing in particular is Chris, how are you guys investing in multifamily and other real estate projects when the Federal Reserve continues to increase interest rates? And I appreciate this question because if you just stop at, oh well, interest rates are increasing, we can't invest. That's not necessarily true. What we do is we look at the investment opportunity and we look at first and foremost, what is the appropriate debt product that needs to be applied to this project to help make it successful. Maybe that the answer is fixed rate interest rates. Maybe that is a floating or variable interest rate loan product that we can allocate to that project. But in the case of a floating rate loan, as an example, what I tell investors is that that may be the right product, but what needs to be considered is that if you're hearing floating interest rate loans in the interest rate environment that we've been in, perhaps you want to be asking questions to that fund manager or operator around whether or not they have they or their operating partner have what's known as a rate cap. In other words, have they prepaid essentially to the lender certain, and purchased certain fees to be able to help prevent that interest rate from increasing beyond a certain cap that is established, and so that they can take advantage of all the downsides, but never be put in a vulnerable position if interest rates were to increase again. So it's those types of things that you need to be thinking about, need to be savvy about, and partnering with the right experts and the right fund managers and operators will help you to do that. And then when we think about the way in which you get into these types of things, there are many different ways. There are, in syndications and pooling investors' money together to acquire assets larger than what we would be able to do on our own. There's that's a direct way to be able to invest in real estate property and get all of the advantages and benefits of these types of investments. Fund of funds are another way, as an example, that allow for investors to get to pool their money together and get that scalability and diversification. But what's great about the fund of funds that I love to help investors know is that think of it as another gateway to give you another advantage in terms of investing, because some of these private equity firms, many of them, because they can raise a substantial amount of capital from private investors, they can then take that leverage, if you will, and negotiate with their operating partners to provide more favorable returns to their investors. So that incentivizes those investors to invest directly with the fund managers, because they get a chance to sweeten their pot a little bit more, and perhaps increase their cash on cash return, as an example, or increase the equity multiple. And then not only that, what's beyond the financial returns part of it, what they get to do is also have the peace of mind and knowing that they are investing with experienced fund managers or operators who have done tremendous due diligence to help mitigate the risk. All investments have risk, of course, but you knowing that you have people on your side that are looking at the investment in every way possible is something that you need to be thinking about. And so one of the things, just before I move on here, so let's also not forget about the fact that tax advantages also play a huge role in this when it comes to private equity real estate in particular. Things like depreciation and passive income can significantly enhance your returns. And what I love to tell people, there's also another quote that I talk about, and this one has been attributed to Robert Kiyosaki. He's talked about the idea that investing is not always about how much you make, but about how much you keep. So if you're making a tremendous amount of money from your stock portfolio, for example, but because the government and the IRS considers those capital gains, and you can't offset those capital gains in any way, you're going to be taxed at a higher level. And of course, there are different ways and different accounting strategies that folks probably explore how they can legally navigate through those things. But when it comes to real estate, as an example, the real estate laws allow us to take advantage of things like depreciation and passive losses to offset the income gains, the passive income gains that we have on our passive income, and reduce our taxable income on those passive investments substantially. And these are ways that help you keep more of your investment, your return dollars, which is something that's very important to consider. So at Boost, we in other communities, I might add, there are different clubs that are out there for people to join. This is not a paid club. Boost, we have a free to join club for those people who are interested in learning more about investment opportunities, who are interested in being a part of a community of like-minded individuals. You are welcome to join our Boost Capital Group Club. I would love for you to be a part of that. Join our email list, read our blogs, come to our meetups, and learn about what's going on so that you can be an informed and prepared um, a, investor. And you throughout that, you'll be able to also take advantage of not only the benefits of being a part of the community and the education that is provided, you'll also be able to have those curated investment opportunities that we diligently go through and invest to make sure that we're placing only the best investment opportunities in front of our investors. And this is something for that I want you to know. And you should be challenging any investor that you're considering investing with. You should be challenging them to make sure that they are doing this as well, that they're providing you with expert guidance, and that they have a track record of success. You want to make sure that you're investing with those people and alongside of those people who do have that experience and knowledge, so that you can go invest with confidence. And then, of course, as I mentioned before, that idea of birds of a feather, flocking and traveling together. We want to be able to be that network for you, of investors who, to share goals, and, like I said, consume the information, and not only just consuming the information and that comes to you on an ongoing basis, but also apply it. Join our community. If not our community, or join, not only join our community, join others as well, so that you can really continue to grow your knowledge and increase your wealth mindset, and position yourself for a great 2025 and beyond. So, let's wrap up with this reminder here that the best investment you can make is in your future. And I want to be there to support you in navigating, especially in the space of private equity, real estate, and other alternative investments. You can reach out to me via email, as I mentioned before, or you can visit our website or scan the QR code that you see here. My email, just for those of you who don't know, if you missed it earlier, or if you're catching the recording late, my email is chris@boostmycapital.com. You can email me there, or like I said, you can scan the QR code, which will bring you to our website and other information that you'll be able to access. So reach out to me, if you want to learn more. Join our investor club, as I mentioned before. I'd like to thank you all for joining me this evening. I want to also encourage you and wish you a wonderful 2025. Let's make it a year to remember. Thank you. Happy holidays to all of you who are celebrating this holiday season. And with that, I will end the presentation, and will um, will wish you all a good night. I'm happy to stay on for anyone who is still on the presentation to discuss or address any questions that you might have.